right, welcome everyone to our webinar, Automating Revenue Recognition, ASC 606 Compliance and Beyond, where we're really going to dive into ASC 606 and operationalizing that guidance via a systems and processes solution. So a couple of housekeeping items for you today. There is a questions box located in your GoToWebinar bar. If you have any questions during the presentation, please go ahead and fill that out, and we will make sure that answers are provided to you either at the end of today's presentation, if there's time, or we will contact you directly with a response to your question. There are also CPE credits available. There's 1 credit for this 1-hour webinar. However, you must participate in 50 minutes of the webinar and answer the 4 polling questions as the webinar goes on. So we will send those certificates out also after the webinar. So please make sure you look out in your inbox for those CPE certificates. So for today's agenda, we will walk through an introduction of Softrax and Vindicia, as well as our hosts here today from each of those companies. And they will walk you through the recent changes in the back office, some traditional thinking, the new normal, and how the combination of purpose-built billing and rev rec solutions solve the problem of ASC 606 compliance. So again, that operationalizing the guidance, as well as sort of going beyond that, how you implement those changes. So let's meet our host for today. We have from Softrax, Tom Zolli. He's the SVP and General Manager. And from Vindicia, we have Steve Booth, the Vice President. And I'm going to hand it over to Tom to walk you through an introduction of Softrax.
Okay, thank you, Kristen. So I think a number of people out there probably know Softrax. We are a division of a larger company called AFS Technologies. We got involved in complex revenue recognition very early, really in a reaction to 97.2 and some of the complex guidance that existed under the industry-specific guidance under 605. As the name implies, really particular to the software vertical. Offices throughout the world, throughout the U.S. And if you go to the next slide, Kristen, I think what's interesting, you'll see our customer slide. So with 606, one of the most intriguing things is that it gets rid of the industry-specific guidance under 605. What it's really enabled us to do, and you know, as part of this, I think a lot of the complexity and revenue recognition that existed in the software space is now far more prevalent. And if you look at this customer slide, you will see, you know, our roots in the software vertical. Even some of the larger ERP companies in the country use our solutions for RevRec and et cetera. But you'll also see a migration where there are a number of new verticals that are now wrestling with these challenges in media, in consumer packaged goods. And, you know, it's been challenging just to understand the new rules, and it's been very challenging to operationalize the new rules. And between Steve and myself, we see the billing and we see the RevRec challenges. And you know, I think one of the purposes here is to try to, you know, walk through some of the knowledge that we've gained and some of the best practices. And with that, I'll turn it over to Steve.
All right, thank you, Tom. Excuse me, nice to meet everybody on the call. Just a quick introduction. My name is Steve Booth. I'm the Vice President of the Eastern Region here at Vindicia. I've been with Vindicia about 9 years, and the majority of my working career has actually been in the billing and customer management space. I've actually held other jobs, and because my favorite topic to talk about is me, you're actually going to hear about them, but I promise it'll be actually germane to the discussion. A little bit about Vindicia. So we are known as the subscription people. Our organization was purpose-built about 15 years ago to address the challenge of the billing and customer management space for subscription businesses. Our main focus on that is in the business-to-consumer realm. Interestingly, if you look at the mission, you know, some of you, especially from the finance realm, might be a little confused when we talk about our mission being helping businesses acquire, retain, and expand. The reason I say it might be confusing is that quite often, and understandably, billing is thought of as a back office finance function. But we live a very interesting bifurcated life here at Vindicia, where, just to be clear, we absolutely do the back office part. We're going to talk a lot about that in terms of charging the cards, making sure the money's in the accounts balances, feeding, rev rec, things of that nature. But the other thing that we do, and is probably the prime thing that we bring to the table, is a marketing enablement side of things. And we're going to talk a lot about that today. So if you look at the next slide here, we have customers too. But the nice thing about being in the direct-to-consumer market is many of you on this line probably know these companies, or more likely are actually customers of these companies. And that is going to be a perfect lead-in to our next topic that Kristen is going to introduce you to.
Sure. Just quickly, guys. So Steve is going to walk you through the state of the billing market to open up our discussion today. Back to you, Steve.
All right. Thank you, Kristen. So the reason I had mentioned before about, nice being a direct-to-consumer and knowing who the customers are is that we're talking about the rise of the subscription businesses. And the reason it's nice from a direct-to-consumer realm is all of you, while in your roles with your organizations, also happen to be consumers. So I think if you look at yourselves, it's more than highly likely that many of you on this call are driving this growth of subscription businesses. Me, again, I love to talk about me. I've got Netflix, I've got Sirius XM. So you're seeing, music services is a great example, where before it was consumed piece by piece. Now folks are moving to a subscription model and doing it from a streaming perspective. I've actually got a subscription for dog tracking. I got a beagle that likes to run away, so he's got a collar on him where I subscribe to a service that if he runs away, I get to find my dog, which is, to me, a very valuable subscription services. So you're seeing the world move toward the subscription model. And the reason that I'm confident it's going to continue to grow is that both sides of the equation are very much on board with this. Customers themselves, we've seen of late where, the old days, and I'm a little older, people would say, oh, they'll never pay for this, never pay for that. This consume over time model, subscription model, people really have taken to, mainly for not a large upfront cost, the ability to change in and out of things. So you're seeing that from the consumers like this model. On the other side, the businesses, and I'm going to say probably the majority of the people on this call, from a finance perspective, also like the model. Because now you're talking about things like, waking up the beginning of your fiscal year and having an eye toward predictable revenue. As I mentioned before, I'll tell you about my past. I used to work in a on-premise software world, and we would sell on-premise software. You'd pay for it and you'd get it. But the finance folks or the organization, the beginning of the fiscal year, license revenue got reset to zero. So planning and doing those things was much more difficult, where in the subscription world and the recurring revenue world, the finance folks get to wake up and with some level of certainty can say, I know how much revenue is coming. So it makes it much more easy to plan. So if you're not doing a subscription right now, I guarantee you're probably talking about it, but a lot of folks are moving in that direction. And that's what we're really seeing, the world change. So we're looking at the next slide here. There's actually, that is here, right? That's done. We're seeing it. And again, you probably from your own personal perspectives, you're seeing the growth in subscriptions. The big change we're seeing now is the move toward personalizations from subscriptions, where the idea is that customers are really looking for a member experience these days. Many of you, if you're doing direct-to-consumer or B2B, you might call your customers members, or another word to take the customer vernacular out of it, right? But as you see here, the numbers, 28%, looking at personalized experience as a high priority, 23%, personalization is the most important consideration. And again, I think those numbers are going to grow. I happened to work before at a company that did, personal analysis and data management for, targeted marketing. And it's very interesting where, you hear a lot of talk these days about data privacy. And so it seems to fly in the face of personalization and this growth of personalization. But if you dig deeper into it, what you're going to find is that customers will tell you, I'm okay with you taking and having my data if I get a return benefit for it. If I see that I'm getting a better experience, they're okay with that. The other reason you're seeing the personalization grow is that from a selling perspective for the business, it gives you more options for a market. If you have a one-size-fits-all product, I used to play junior economist and say, if you've got a one-size-fits-all product, at any one time, 1/3 of you, are both parties happy. The amount I'm getting is equivalent to the amount I'm paying. But on the one side, it might be, I'm getting way more value out of this. It's the greatest deal in the world. You might not be happy because as a business, you might think you can generate more revenue from me. The other side says, well, maybe this product and package that you've got, I won't use it as much. So the amount you're charging isn't equitable to what I'm going to pay. And we're seeing a lot of that now. For those of you that use Hulu, they just announced what they're calling skinny bundles. So they're doing the same thing. They're saying, well, not everybody wants to spend the $40 a month to get everything. We're going to break it up into smaller pieces so people can move in and pick and choose what they want. And by doing that, it gives them a growth plan into the greater levels of product set, but it's also moving into things like bundles, so more products and services together, because that gives the advantage of retention of the customers and holding on to the customers. So that's what we're really seeing in the marketplace, and a lot of our customers are moving that direction. We're helping them move that direction. But looking at this next slide here, the other real key is that you might not necessarily have a choice, right? Because when you look at this world, we all have a lot of competition. I like to say that, sometimes people ask me, oh, who's your competition and do you have any? And I say, well, look, if my answer is I don't have any competition, I'm either way out in advance of an idea or I'm doing something so dumb no one else wants to do, right? So we've all got competition. And if you're not going to do it, somebody else probably is. And a lot of ways to, fight this personalization if you don't have the capabilities, you might start lowering prices, doing things that really hurt the margin from that perspective. But the key is that there's a lower barrier of entry in a lot of the markets we're in, and that you need to be able to keep up with that, right? So, there's the famous example back in the day, and it still holds true, of when MCI came out with Friends and Family. Literally, they grew solely on that package. And the key thing that helped that drive that growth was, A, it was a good idea, but B, the other folks, and this is a true story, could not duplicate it. Their systems weren't able to do it. So they took an enormous share of market of that. Now, one of the challenges of personalization and iteration is things like complexity. And there's a multi-sided complexity we're here to talk about today. One side is on the billing side, and then Tom's going to talk about things like ASC 606 and what does that mean in terms of adding complexity to the subscription world. Tom?
Yep, sure. Yeah, thanks, Steve. So, it's a really good segue, and I think one of the points that I wanted to make right on in the deck is that all of those things that Steve described in terms of the requirements coming from the front office, I feel like it's a double whammy currently for the back office in terms of the rev rec, because what you have is at a time when you have an increasing requirement to handle personalized services, personalized subscriptions, as Steve described, you have all those change events. It's now coupled with the adoption of new guidance that specifically makes it more complex to handle those change events from a rev rec perspective. And I'm really speaking primarily to the combination and modification guidance that you see under 606. And we'll talk, a little bit later in the hour here on how some of that can be handled. The other thing is that a lot of these subscriptions, because they involve overages, payments in arrears, things like that, not always, but it's frequent. It trips into the contract asset and liability disclosure guidance out of ASC 606. So, I think the fundamental point is that you may not be in a situation where you're required at present to deal with these complexities. But I do think when you think about operationalizing your environment, it's not, I don't view that as a point in time thing. I think it's a set of phases. It's a strategic plan to drive the best operational environment you can. And we'll get into that later. But you have to consider, are these things that I'm going to have to deal with later? And if I am I doing the right things now? And, like I say, we'll get into more specifics on that a little bit later in the hour. But for now, back to you, Steve.
All right, thanks, Tom. So one of the things that, as I mentioned, I've been in the space a long time, and we talked about the fact that not only, in the world that I live in, that we're looking from our system and helping from a financial perspective, but also from a marketing perspective. And one of the things we've always talked about is that the interesting dynamic between a front office marketing organization and the back office and what that interrelation is. And if you think about it, quite often what happens is, you bring marketing people in and you fundamentally say, hey, marketing person, go do three things. Go get customers, keep the customers, and try to drive additional revenue out of the customers. And you go do that. And what ends up happening is, they go in and they go with a blank sheet of paper and they say, hey, we have an idea that we want to try. And then what happens is they come back and say, okay, well, I want to instantiate this. And they go to I'm going to talk billing for a moment here. They go to a billing provider or, the billing in-house system. And they say, can you do this? And often the answer is, well, no, you can't. So go back to the drawing board. Or sometimes you get yeah, you can do this, but it's going to take, X number of man hours to develop it, which is going to cost X amount of dollars. And then the question gets asked to the marketing folks, well, how much money are you going to make? And most marketing people, usually give the answer, and it's understood of, I don't know. I'm in marketing, right? I try things. We have things called A/B testing, right? We try different things, we keep what works, and we get rid of what doesn't. So what happens is we often found, and this is true today when I still meet with people, especially the marketing folks, and say, quite often the billing infrastructure, in our discussions becomes the lowest common denominator in the marketing. You start to say, all right, well, what can it do? And let me market around it. And as you can imagine, that's usually not the most successful way for a go-to-market strategy, right? So now that you've got personalization, you're adding things like that, that's going to get ramped up even more. And then on top of that, as Tom just mentioned, now you've got some regulatory requirements that are being added onto it. So no longer is it, can I bill it? But now is it, can I recognize it? So for lack of a better term, the gauntlet that, marketing might have to run through or work with is figuring out, I have this great idea, can I actually manage it from a back office perspective? And it really does, you're seeing both sides of the coin, the complexity ratchet up. So Tom just mentioned, the complexity around 606 and all the requirements there. We've talked about personalization, which is going to be the idea of quicker and faster iteration, more complex business models. And, I think the reality is I was not a mathlete in school, but in this case, it's not complexity plus complexity. You're starting to get into complexity times complexity, right? So it can be, a much more difficult thing to do. And, that's really, you've got to figure out, okay, well, how am I going to make this work? Now, I have to tell you that I'm a big fan of every webinar that, I'd love to have somebody have a walk away, something they can do today. So I do want to be very clear and say, I can give you an option right now. There's always the option to say no to the marketing folks and just say, no, you can't do it, and just stick to your guns and just keep doing what we're doing. If you think about it, it will solve the problem because eventually the revenue will dwindle down, there'll be less to bill, and then there's no revenue to recognize. So if you think about it, that's an option. Now, I'm assuming unless folks on this call are not independently wealthy, let's just call that a plan B for right now. So what we're hoping to talk to you about and then help you understand is that there are some options out there, and we'll talk about some of the options that we're going to propose as slightly better than just telling the marketing folks no. But before we do that, Kristen is going to introduce the poll to get some feedback from the audience to see what you are, what are your experience today from what we just talked about.
Thanks, Steve. I certainly want to avoid Plan B on my. All right, guys. So I am launching the first polling question. Again, you have to answer the polling questions if you want CPE credit. This is a nice and easy one. I'll give you about 30 seconds to answer, and then I'll close it and let our host kind of share their thoughts on the results. All right, so the question is, have you or your company ever abandoned or declined to pursue a marketing or sales initiative due to IT, finance, or back office concerns? So please let me know what your answers are, and I'll give you another maybe 10 seconds to answer it. And we'll close it and share those results with you. All right, we got some good response rates here. I'm going to go ahead and close the poll. And let's see those results. So we're pretty evenly split. Tom, Steve, you guys have any thoughts on this on these results?
Yeah, actually, I could dive in quickly, Tom, if you don't mind. First, is that the interesting thing, and this is what we're going to actually talk about. So it's a perfect segue in to the next part of the conversation. Is yes, there's folks that have done it, right? So obviously, when you look at that on the surface, don't know the situation, that's probably from a theoretical perspective something you don't want to be doing from a stifling of marketing or sales initiatives. On the second, where they're saying no, that's terrific. And I think then now that probably begs the second question: what did it take to not say no, right? So I think there's we're going to probably dive a little bit deeper into the second as well to say 3 cheers and a tiger for you for not saying no. What did you have to do, though, to allow that flexibility? And we're going to talk about that. I don't know if you have any thoughts, Tom.
My only comment on it, too, echoing what you said, and I also think, it'd be interesting in the no case, like maybe it's a future poll question for us, but to me, this is not a failure to act for those that said yes. I truly think of it as a failure to prepare. Because to your point about the MCI WorldCom case, it's extremely difficult if the setting is not correct. It's extremely difficult to react when there's a realization that there should be some new approach, particularly when you're reacting to a competitive threat. I think it's very important, to just ask yourself: is my operational environment in such a state that I can react? And if it's not, don't wait. Don't wait for the requirement to react. Get it into shape so that you can react when the requirement comes, whether it's something you initiate, which is better, or God forbid, the reaction to a competitive threat. That would be my thoughts.
All right. Well, thank you guys for your comments. So just like Steve mentioned here earlier, we're going to jump into what are the options. So first up, let's hear from.
That'd be Steve.
Yes, sorry, I'm just flipping the page. There we go. All right,
there
Steve,
we go.
you're up.
Yep, back again. So now I don't know. I cannot see the number of attendees, so I don't know how many dropped off and took Plan B. So maybe a bunch of people dropped off and said, "Well, that's easy, and I'm out of here." So I don't know. But for those of you that are staying on, we're going to keep. Let's figure out a Plan A, right? So the historical solution to this has always been, ERP. Now ERP. You can use that term 2 different ways, right? Everybody in theory, if you look at what ERP is, has ERP. Enterprise Resource Planning. What do I have? So what we're talking about here when we say monolithic ERP is that singular product that you went and bought to say, okay, I wanted to do everything. And why did people do that? And if you look at this, if you read through these bullets, all-in-one approach, reduction in back office complexity, one single database, no integration issues. And then let's face it, there's the dreaded, inherently violent one throat to choke, right, that you heard out there in the world. And so if you look at it, it actually makes perfect sense. But if you look at some of the next slide, some of the challenges that come in that, and yes, here I go again, talking about me again. Full disclosure, I worked at Oracle. And I sold the ERP solution. So a lot of the drawbacks you had, mile wide and inch deep, right? Was it really specific for the business, right? They weren't inexpensive, difficult to implement. You're tied into one vendor, all those good things. But here's the real reality of this that I found, and is that when you looked at a single purpose ERP solution, SAP, NetSuite, SAP, whatever that is. And I learned this when I was at Oracle. The reality of where the single purpose solution broke down, even in those companies, was in the billing space. And because the billing is generating your revenue, therefore your rev rec followed right along with it. Let me explain what I mean by that. when you look at, a traditional, just from even just a financial perspective in ERP, you're looking at, your GL, your fixed assets, your project accounting, your payables, things of that nature. Some of you on this call might be, doing and actually separating your business with those things, but a lot of ways, those things are the necessary evils. You want to do them quickly and efficiently. So you're not really, they tend to be the true cross-industry, cross-organization. They tended to work for most people. Where the breakdown came from an industry perspective was actually in the billing space. So again, working at Oracle, if you were a manufacturer, their AR billing system was perfect for you. I send you a product, you give me money, I track, DSO, all those kind of great things. But if you were healthcare, you were utilities, you were magazines and newspapers, you were telco, you were now subscription services, that AR solution didn't work, right? So they either started building separate industry solutions to do that, or somebody ended up going out and saying, okay, well, I've got to figure out another way to do that, right? So that was where the flaws came in. And then treed off of that really was revenue recognition. Because again, the billing's creating the revenue, the rev rec has to manage the revenue. So you really found out that, there wasn't a real purpose-built thing, and you tended to have to go look for an industry-specific solution. And then Tom's going to talk to you about some of this from some of the challenges of this monolithic approach with the new guidance that's out there today.
Yeah, thanks, Steve. So, the situation, from our perspective, has gotten a lot worse under ASC 606. And, I think that one of the things that it's done is it's really exposed a fundamental flaw in these ERP systems. And I think it's what's driving, a lot of the angst out there but around operationalizing, either the new guidance or the tenets of subscription billing or really both in a lot of cases. And so, traditionally, as Steve mentioned, I think the ERP systems for the most part were designed for the manufacturing vertical. Under 605 and other, prior guidance, basically, you would trigger revenue recognition off the generation of the bill. I bill it, I recognize it. Under 606, that tenet is really wiped away. One of the basic tenets of the 606 is that you recognize revenue according to the rate of the delivery of value to the client. Now, do you ignore the billing in that case? No, because there is a disclosure requirement under ASC 606. So what you really are saying is, okay, so I entered this contract with the client, I'm delivering value, I'm going to recognize revenue as I'm delivering it, but I now need to disclose how much of that revenue is billed, whether it's sitting in deferred as billed as a liability, or whether you have some that's recorded to revenue and it's unbilled and it's recorded as an asset. So that's one major thing. The other major thing is that you have this requirement far more broadly now, and we had it in the software vertical for forever, back to 97.2 days, where you really have to have an understanding of total contract value to start the revenue recognition process. And you have to have that understanding. And so, if you're out there and you're not having to do, allocations right now, consider yourself fortunate, because, one of the things is if you deliver these performance obligations, so if you sell things to clients and you're delivering the value at different rates, probably either now or at some point in the future, you're going to trip into the allocation guidance. And so you're going to have to, at a point in time, understand total contract value, understand the standalone selling price for each of the obligations, and perform a proportional allocation. Well, when you're triggering revenue off the billing event, it breaks that, because as soon as you're doing any kind of partial billing, you wouldn't have total contract value off that bill. So now you've got, two things working against you, and you can see the result of this, because if you notice, the ERP vendors that have addressed 606, and not every one of them has yet, but the ones that have, you notice that they didn't address it in the core ERP system. They themselves created an independent module to handle it. And I'm pretty sure it was because they were trying to get around this fundamental issue in the core ERP, where revenue is triggered off the generation of the invoice. So, that's kind of the state of it. I mean, there are people that are trying to work around it. I think a little later in the deck, we'll talk about, some of the potential solutions for that. And so, Kristen, if you can flip to the next here. So, I mean, I think that, when we go into organizations right now, I mean, the first thing I would say is that these organizations are fairly stressed from an operational perspective. Lots of different drivers for it. I mean, a lot of companies, even large public companies, they got started late on 606. It was bigger than they expected. They were able to go live, I'll say go live on the guidance, but they were forced to do it on spreadsheets. And I think the privates may follow suit. Now, so, because of that, and because of I think primarily the flaw I just described, I mean, spreadsheets are out there and they're prevalent. And I think of spreadsheets as sort of I think of it like a local maxima. So if you're thinking about your environments, I mean, spreadsheets are the best solution ever invented. They are also the worst solution ever invented. And why do I say best? I say best because they're extremely flexible, and arguably you can achieve some level of automation in spreadsheets, and you certainly can achieve some agility because of the flexibility. Why are they the worst? Well, if you think about like the nirvana state of a back office operationally, I mean, what you really want to have is you want to have systems feeding each other, heavy automation in terms of the processing, but you also want to have all the things that go around that: strong audit capability, very strong reporting, the controls and the security. We actually are doing a deep dive webinar, I think, in a month, specifically on some of these issues related to spreadsheets. And so, unfortunately, the classic adage in the product space is that the prototype becomes the product, right? So a lot of organizations out there, they run into a problem, they go to spreadsheets to quickly solve it. Could be the right move at that point because you have to get something done, you have to get it done quickly. The issue is that they wait too long, so they don't move off those spreadsheets. They get more and more complex. We see it all the time because we see the disaster after they effectively fall over. And so what I would encourage is, when you're thinking about this, you have to assess the timing. But if you're doing something on spreadsheets now, don't wait till it falls over. Assess, and we have experts that can consult on this. I mean, our guys are very good, but assess where do you ultimately want to go operationally, and given that plan, when is the right time to move off spreadsheets? And it could be an incremental thing, but again, I wouldn't wait too long, because the people that move quickly are the ones that face the disasters and restatements and everything else. And I think, Kristen, with that, there is another polling question coming up.
There is. Thank you, Tom. Okay, so, same thing. I'm going to go ahead and launch the polling question. Please go ahead and take about 30 or 45 seconds to answer. It's another quick one. How are you accomplishing revenue recognition today? Are you using those spreadsheets? Are you using some sort of ERP system, maybe an existing ERP, or building that ERP solution out? Are you using a purpose-built solution, or are you using some other means for compliance with revenue recognition policies? We'll go ahead and take another 10 seconds here or so, and then we'll jump into our next topic, which, surprise, will move us towards a solution, those purpose-built solutions. All right, a couple more seconds here. I'm going to close and share with you all. All right, so results are out, and it looks like the winner is spreadsheets. I can't say that I'm surprised by that, but Tom, after your last spiel there, do you have any comments about that? Expected, and maybe even a little lower than what I would expect. So, it's a case-by-case thing, but like I said earlier, I think you have to evaluate where you are, what your overall goal is in terms of operationalizing. Keep in mind Steve's points. I think they were all very good points, that the market is changing quickly, and your competitors are there. So, do you feel prepared to rapidly react to a change or a competitive threat or whatever? I mean, that would be my initial thinking. Yeah, Steve, what about you? What do you think about these results?
I would love to know what other is, right? Because you think if you think of, I don't know, I don't want to say the lowest form being spreadsheets, what's other? So it would be interesting, but no, not surprising at all from my, experience doing this. It is the de facto, go-to from a spreadsheet perspective, and we'll talk a little bit more about that as we move down the road.
Yes, You are correct. And actually, we're going to go ahead then and jump into our next topic. And Tom is going to lead us into a discussion on the new normal ERP augmentation with purpose-built solutions.
All right. Thanks, Kristen. Yeah, so in terms of solving the problem, I mean, I think we talked a lot in the presentation about, you know, some of the market factors, whether they're regulatory or just competitive pressure, different things going on that they're really putting some stress on the back office. Again, not everybody, but to differing degrees. I think one thing I would add to it is that I do think that the regulatory pressure is going to increase, not decrease. I think there are a lot of companies out there that have been able to get by, you know, particularly related to ASC 606. I mean, the SEC in particular, for public companies, has stated that they wouldn't be too aggressive with comment letters. I think it's caused the auditors to back off a bit. And so some of the requirements around like allocations and supporting contract modifications, following the letter of the law, I think it's a future thing for some people. And so, you know, when you think about these things all, you know, coming to fruition, whether it's 2019, as many people suspect, or later for the privates, you know, the question is, so what is the ideal path, really? And you know, when I talk about this ideal path, I mean, one of the things that I think is not really so surprising to me, but occurs nonetheless, is that when I'm having conversations with people about operationalizing the back office, there's a lot of disbelief, I think, in terms of, you know, what I would call the nirvana state. And so what I mean by that is, if you think about it, there are, you know, large teams out there, whether it's, you know, on the billing side, on the RevRec side, dealing with fulfillment events. And these people are very hard workers. I mean, they're dealing with data that needs to be precise. And in the spreadsheet world in particular, I mean, they're burning the midnight oil in close process, even throughout the month. It's a lot of blood, sweat, and tears. And if you think about the problem space, I mean, back office finance, a lot of it involves, you know, certainly capturing correct data in correct systems. And then it really is a lot of computation on that data. And there really is, it is the perfect problem for computers. I mean, the computing environments out there were designed for this kind of thing. And you ask yourself, so if that's the case, you know, why are these people having to work so hard and do, you know, these very tedious tasks over and over again, et cetera? And, you know, I mean, there are good reasons for it. It comes down to, you know, things like, okay, my ERP couldn't handle it perfectly. I either, you know, do more customizations, which seems like a constant thing, or I move a few things out of spreadsheets. Well, unfortunately, it's insidious, because as soon as you move things out into spreadsheets, it has a ripple effect, because now it's much harder to feed that data into another system that may need it to perform its task. Classic example, fulfillment events, right? I mean, all the CFOs I talk to, all the CIOs I talk to, they always are telling me, like, you know, we go through these close processes, and the number one thing that is killing us is collecting all these fulfillment events. A lot of them floating around in emails, logged in a spreadsheet somewhere on SharePoint, what have you, you know, during the close process. And so, you know, not having those fulfillment events in systematized in some system, painful down the line, because now the RevRec people that are trying to record all that stuff and trigger release of revenue, it's difficult. I mean, they're parsing through emails and things like that. So, you know, when I go into the organizations, I mean, we're talking about significant automation here. We're talking about a nirvana state where these things are automatically flowing system to system. I don't want to say in a phase one, because I'll tell you, phase one for a lot of people right now is just getting the billing systems in place to handle the new normal that Steve described. We're dealing with ASC 606. What I would articulate, you know, in all reality, is more of a phased approach, where you say, where do I want to be at my end state? How much, you know, what automation do I want to be agile? What do I want in terms of security and controls? And look at that and say, what do I need to do next? And it's going to involve not just maybe dropping in some purpose-built solutions, which obviously Steve and I would love, but also looking at some of the other systems and processes in the organization. So, you know, what we would recommend, and there's a lot of logic behind it, you know, as far as our experience has taken us, the best approach among the options is definitely keep the investment in the ERP system. I mean, it serves as a very strong backbone. It can be a center for communication, et cetera. But to drop in point solutions, according to your plan to achieve the ideal operational state. And one of the values of that is, these are separate projects that you do that should have immediate value on their own. So it's not revolution. This is evolution. Clear value for each step that you take. And the value is, if you think about it, if you think about an ERP vendor, I mean, these people, they have an incredibly hard task. They have to be all things to all people in all areas that the ERP system covers. And the world just got infinitely more complex. They are not going to keep up. I mean, it's intractable. If you think about then moving to sort of a purpose-built approach, the option that you have is you can look at particular specific slices of the overall problem and say, okay, I have a billing issue, right? What is my billing profile today? And who is most optimally positioned to handle that? I think Vindicia, to just give them a plug, I think they do an incredibly good job in the B2C space. And you can say, okay, so I'm going to put this in now. I'm going to start evolving my plan toward my end state for operationalization. The advantage that you have, the major risk reducer is, it's far more highly likely that you're going to do everything out of the box. So the plan should be to keep everything out of spreadsheets, out of SharePoint, out of whatever, because like I said, it's going to have downstream impacts to other parts of the system that are insidious, really. And the other thing is, if the business evolves, if it truly evolves that much, now you're not talking about a rip and replace of some massive ERP system that you customize the heck out of. You're talking about looking at that particular piece of the puzzle and saying, all right, am I changing enough where it makes sense to pull this piece out and replace it with something else that more closely supports out of the box that area of my business? And it could be, I mean, full disclosure, it could be that even our RevRec solution. I mean, if you are somebody that does commercial RevRec, we think we have a very good solution. If you suddenly switch to doing government contracting and your cost accounting, then we ourselves would recommend potentially that you look at another solution. So that is the strategy, and generally speaking, that we would recommend. How you get there, part of your operational plan, but important to have a long-term plan. And with that, Steve, I think I was going to send it off to you for the next slide here.
Yeah, so I think you were going to cover this one actually, Tom, but I can walk through things. So I think at the end of the day, Tom did a great summarization, and he mentioned the evolution, not revolution. So I think he talked a lot about this. I think the real key, if you look at the 3 bullet points at the bottom, reliability, speed, and user experience. Reliability, I think, goes without saying, right? The numbers have to be right. I mean, this is not, good enough, close enough. The numbers have to be right, and your auditors have to like it, and the government has to like it, and the SEC has to like it. So that's really, paramount. Now that sometimes flies in the face of speed, right? So that's the interesting dynamic that you're talking about, where, not to say that marketing people are out there willy-nilly doing things all over the place, but, be it reacting to competition, like some of the examples we talked about, or them just coming up with an idea that they can be that first mover. Speed is paramount in that world. And we talked a lot about, direct to consumer, and we gave the MCI example, and I've given some other examples, but, I think this definitely applies to the business to business world as well. So, and I'm sure folks on this call that are in the finance organization have lived this, if you're business to business environment. And I might have been on the other side causing some of it, right? So when you think about this, even in the business to business world, where as opposed to the mass quote unquote sales marketing, because in the direct to consumer world, your marketing is your sales. But in the B2B world, where you've got individuals out there working one-on-one, negotiating contracts, they might be putting things in the contracts that, the finance folks have to look at, and they've got to figure out, and can they do it that way? And I'm pretty sure that everybody in this room in the B2B world or on this call has lived in the world where, if there's a debate between getting a large transaction done and someone saying, hey, it might take me some work to, instantiate this on the back office, I'm going to pretty much guess that the default tends to be that the revenue side wins, right? So speed comes into play in that case as well, where someone's going to want to take a transaction, and I'm sure folks in this, on the call have been told, we'll go figure it out, right? It's not that you figured it out, then let me do the transaction. They take the transaction, they move it forward, and then you're stuck in a position of reacting to that. So I think that's, I don't want to forget that realm, the business to business world, because it really does apply on both sides. Whether it be a large transaction of revenue that someone's saying, if I do X, I get the transaction. If you're, on the back end saying, well, maybe we can't do it that way, you're probably going to be told, well, we got to figure that out. And then on the other side, the direct to consumer, it is about first mover. It is about attacking first or reacting to the competition if you're not, but that's definitely a speed game. And that speed is all around iteration, trying new things, A/B testing. And that can get frustrating for the back office, right? Because if you think about it, a marketing organization is going to tell you, hey, I'm going to try something I think will work, right? And, if you've got to go and build that out, Tom talked about the great example of 606 and talking about, not on the billing event anymore, but actually as the service is being delivered, et cetera. Add to that the other complexity of bundling, right? That's one thing to say, all right, when, it's a single product and now I've got to look at that separately. But now look about when a marketing organization is combining products, right? Now you're doing allocation of fair market value, assignment of revenue inside of a bundle, and then add all that complexity on top of it. It literally is, the gift that keeps on giving. And, if you look at the next slide here, it's, bad news or good news, but it is the new normal, right? It's what we're seeing out there. I'm seeing it every day, every organization we talk to. Their interest is flexibility, time to market, and speed. So it is the new normal. So the challenge is that, when you look at this, you say, never assume, what today's challenge is good enough. And I don't think for most people on this call that that's anything new, because the reality is, I think the answer to that, if you think about it, as Tom mentioned so eloquently, has always been spreadsheets. Because if you think about a spreadsheet, and this is going to be probably a weird sounding statement, because a spreadsheet does nothing, it does everything. It probably sounds a little hippie-ish, right? But, as Tom was talking about, that is one of the things that why people tended to default down to spreadsheets. Because I got in-house people that know how to do it. I don't have to undo anything. I just go in and build it. But then every time there's a change, okay, I can either, tweak it and make a change and, redo my VLOOKUPs and my pivot tables and all that great stuff, or I can just start over and do something different and have a spreadsheet that feeds another spreadsheet. That's the so that reality, I don't think anybody that's dealt with spreadsheets or attacked it with spreadsheets, I think that's the rationale, to be honest with you. As Tom said, it's not that it's the greatest audit controls, et cetera, et cetera. It was the ability to have in-house resources to make the adjustments. But the resources take, do you have the time? Do you have the dollars? And do you have the resources? And is it going to be done in time enough for what the front, the marketing folks are looking for you to do? And, on the billing side, we talk about that a lot, but I'm going to be honest with you, it's easier on the billing side because at least it's a internal choice. Are we going to do it or are we not going to do it? As we talked before about plan B, maybe not doing it isn't the best answer, but it's still 100% in your control. When you look at this from an agility, from a revenue recognition perspective, you're not the final ruler of that, right? 606, perfect example. Here's somebody, externally coming and saying, you need to do things differently. I don't care if you want to or not, you've got to. So you've got to adjust. And so the question is, how do you future-proof, the next thing that comes down the road? So, we talked a lot about that, and I think that is the new normal, that on both sides, this future proofing is something that you've really got to look at. You've got to make sure that, again, it gets back to the answer, the thing we talked about before, I haven't said no, but what have I had to do to say yes? And is that the most efficient and economical and best use of time for your resources to do that? And I think Tom put it very well, the plug and play replacement. I'm gonna jump on Tom's comment and say I'm gonna give you examples. We've had customers. Vindicia is an outstanding direct-to-consumer billing solution. We've had customers come to us and say, "Hey, we're moving to a B2B model. It didn't work, right? Our direct-to-consumer, it just didn't work. We're moving to a B2B." as Tom said, we offered the solution and it worked out well to say, yeah, okay, unplug us and put something else in that's very focused on that, because we're not the best solution for that. So that inherent downstream flexibility comes, but I will say both inter-system and intra-system, right? You need to really make sure you have the flexibility, for both of these things. And then that really gets into, again, back to the concept of what is a purpose-built solution, and why is that, a good solution for all these things we're talking about. So I think we've scared you enough with it. Now Tom's going to talk about, diving into the idea of the purpose-built solutions and what they bring to the table.
Yeah, really quickly, just because I want to get to the other polling questions for the people that need the CPU credit. I mean, just, one comment I would say is that when you think about sort of that long-term plan I described, and whether it's purpose-built or some other approach, we think purpose-built is the way to go. Just also think about the, not only how do I handle today's problem, but how do I sort of harden my systems and my approach for the problems of tomorrow so I can react quickly. And with that, Kristen, why don't we jump into that polling question?
Sure, that would be great. And actually, I might go ahead and bump out two of them here at once, just so we can get this done. All right, so you guys know the drill. The question is your billing department thought of as a cost center or a profit center in your company? Please answer as either cost center or profit center. I guess while we give them another 20 minutes, does somebody want to comment on cost center versus profit center?
Well, I think that Steve articulated it well. I think that, the term billing is now a dated term. I think that, from our perspective, one of the things that Vidisha does well is it enables their clients to really, kind of optimally monetize the relationship with their end clients. Some of the things they're doing via data analytics, et cetera. It's really about not just the task of billing the client. It's how do I sort of maximize revenue, maximize the customer experience, et cetera. I think that's an important point here. And very interesting on the results. So yeah, I think this will change. I mark my words, this will change. The companies that succeed will be in that profit center category.
Yeah. All right, so we only have 3 minutes left. You guys mind if I go ahead and prompt the next polling question so we can make sure those people get credit?
Sure, and then we can wrap.
Yeah, and then we can wrap up the last section for them. All right, guys, last question. All right. What parts of ASC 606 do you find to be the most challenging regarding revenue recognition? So we, listed a couple of complex scenarios here, so allocations and SST determinations or maintenance, contract modification, asset and liabilities, or maybe the disaggregation of revenues, and of course, variable consideration. Of course, I think these kind of vary depending on your industry and your company, but we are very interested to see what you have to say. All right, I'm going to give you about 5 more seconds. Hopefully this one's kind of an easy one. You know what's causing you trouble. If it's all of the above, just select the one you like the least.
I'm betting it's one of the top 2, but we'll see. Could be surprised.
And you would be correct. So, let me share those again. All right. 30%. Pretty close, though.
Yep. Closer than I thought. I mean, yeah, interesting. That allocation one can be a killer, and it makes the second one more complicated as well. Interesting that the variable consideration one is coming up. That's a higher percentage than I've seen in the past, but that's an indication that people are starting to tighten up in terms of following the guidance, I think. So that's good. All right, why don't we go into the last couple of slides, Kristen, so that people can get back to their jobs.
All right. So the next topic that we're going to talk about is how does the combination of purpose-built billing and revenue recognition solutions solve the problem of ASC 606 compliance? And Tom, you're up.
Yeah, so I described the problem earlier, and I thought I promised I'd explain a little bit on the solution here. So the thing to look for when you're looking at these types of solutions really is a couple things. One, can it handle any kind of bundling activity that needs to occur. It's really about sort of one of the major tenets of 606, separating out the performance obligations. The second thing is the order to cash and order to revenue processes. They were not separate in traditional ERP. One was really triggered off the other. What you're looking for there is, that the schedule by which you initiate the order, bill the client, eventually get the cash, should operate on its own thread. It should not be counter-dependent on the schedule of delivering value to the client, booking the revenue, etc. The two need to talk to each other because the revenue process in particular needs to understand what's going on from a billing perspective, from a contract asset and liability disclosure requirement. But they should not be intrinsically tied to each other. One should not block the other. And in core ERP, traditionally, you had RevRec could not start until billing occurred. So I think it's an important thing to look out for. The other thing I would say, and I think it's on the next slide, Kristen. A couple things then. I mean, definitely as you're evaluating these things, and what we've done with our partnerships with our other partners such as Vindicia is make sure that, through the single integration, we can get total contract value. So the order closes, they're going to be doing a lot of things in terms of scheduling out the billing. Sometimes it's actually very complex, but we get the order information right away. It gives us the total contract value. We can set the revenue up and schedule everything out, all of that stuff, do all the allocations that we have to do, etc. And then, the other requirement is just to, and this one, I tell you that a lot of people miss this one. They're so focused on, can this thing handle my orders? Can I get them? Will it set them up? Will it handle the automation in terms of assigning accounts and all that stuff? You really need, if you have this requirement around modifications or combinations under 606, you really need to ask the questions, so can it handle my post-processing? And I would even extend this really to, can it handle my post-processing, meaning additional orders that are going to trigger some form of modification? Can it determine which one it is? Can it automatically handle it? Same deal on the combination guidance. But I would extend it to say, look at your fulfillment events as well. And you may not have a fulfillment system right now. It might be spreadsheets and SharePoint or whatever. But, if you were to make that step on that side of it, would it be able to automatically take those events in and process them through such that you're just looking for variance reports and things like that? Those are the things that I would look out for. And we have one more, Kristen. There's this discussion of the core processing, and we've gone through some of the detail. If you have questions, we're happy to answer more, specific areas of the guidance, specific examples of variable consideration or what have you. The other side of it, though, which is a major, major win if the solutions are implemented correctly and if you have the right plan, is the compliance angle, because it's extremely hard to enforce controls in Excel. It arguably can be done, but it's very, very difficult. Once you get everything operating out of the box, and remember the comment I made about, if something moves out into Excel or into a customization or something like that, it's insidious. It starts to break things up and down the chain. If you can avoid that, get everything into the box, your compliance structure should be infinitely better. You're controlling who can touch what. A lot of things should not be touched. A lot of things should not be editable unless somebody with super privilege allows you to edit it. Other things, may have to be, but it's one of the rewards. The two other rewards I would point out here very quickly: transparency. I mean, there is no reason why your executives, whoever, should not know in real time exactly what's happening in the business. There really is no reason. I mean, the limitations are some of the system gaps that would have to be rectified over time, but you can get there. And the other one I've forgotten. There's one other one. Yeah, I forget it, but write me. I'll probably remember it afterwards. And let's see. We did the polling question. Is this, yeah, that's me as well. Yeah, I mean, it's a summary of what I just said. I mean, basically, if I were to summarize the conversation, I would say it's going to be very hard to solve this problem in spreadsheets. It's just too complex. It's going to be very hard for the ERP vendors to keep up with it. We think that going best of breed is important, but I think the most important thing have a long-term plan. Figure out what your plan is to get to the end state, whatever that is, and what are the steps to get there, and just take the first step. So, and back to you, Kristen.
All right. Well, thank you guys so much. I'm so sorry that we ran over. Thank you to everyone who, stayed with us those extra couple of minutes. Up on the screen, I did note a couple of upcoming webinars that we have. They are also listed out on our website at softtracks.com or revenuerecognition.com. We have one coming up in November that's going to talk about automating ASC 606 and reducing costs for audit and compliance risks, and a couple of those benefits, and that will be with another consulting partner. Thank you so much, Tom and Steve, for your wisdom and your knowledge and spending time with us today. If anyone has any specific questions on RevRec for Tom or on billing for Steve, their contact information is here on the slide. We will also be sending out the webinar to you guys and putting it up on the website on this webinar page. You will be able to watch this on demand as well once it gets posted here within the next week, and we will send out your CPE certificates. All right, guys, thank you so much for joining us again today. I hope you guys have a great rest of your day.